Good
Morning.
morning.
Hey, good morning to you.
How you doing?
Doing great. Pretty quiet weekend open here in the old stock market. S&P's
Yeah,
pretty much flat. Dow's flat. Nasdaq's up a whopping 0.13%. Now, Bitcoin, on the other hand, did make a move this weekend, but it has since retraced some of those gains. So we'll see if it wants to go for new highs or if it's just another fake out.
did they just change a rule on Bitcoin?
Oh, I'm sure they're always changing rules. I saw that someone's going to buy $1 billion of Bitcoin.
Yeah,
Yeah, in their SPAC.
yeah,
That's what Morgan just shared. Yeah. Um, hey, you can't deny that the adoption curve is increasing.
yeah, for sure. I mean, Trump definitely, you know, pushed that agenda forward a little bit and did pretty good for crypto,
Yep.
for
Now
sure.
I'm curious. Is Nate on here?
He's not at the moment. He said he was having a little bit of technical difficulties this morning.
Yep.
I said, maybe it would be nice for the people that come on like right at 10 o'clock that he should be fashionably late because he posted this link in his Telegram about a couple of tickers that he's just really not sure which way to go with. And I posted in the chat. I talked about it about 15 minutes ago. For everybody who's just joining, if you see that message that I pinned in the chat there, Nathan's got two assets that he is just been on the fence about for week after week, not sure whether it's like an amazing opportunity or whether it's really just the flip of a coin and dumb luck. And if anybody can correctly guess in one single guess the two different assets, the two tickers that he's talking about, then he'll send you an opening playbook T-shirt if you're the first one to correctly guess. Although I think it's pretty tough for anybody to really
Yeah.
know what he's thinking, both of them at the same time. But I said, it might be nice if you're fashionably late to give the people that come in right at 10 o'clock a chance to guess. And he said, I might be fashionably never with the technical
Wow.
problems I'm having at the moment. So
Well,
let's
I know
see
I
here.
want my T-shirt, so he better show up.
Right, exactly. He's having a little trouble. Let me get with him for a second if you can entertain the troops.
Yeah, definitely. We are going to. So today, Nate was going to give his just a little training on trade management, having a game plan when it comes to managing your trades, your strategies, your positions. Unfortunately, as you just heard, he had some Wi-Fi issues over the weekend. Believe it or not, we have never seen Nate had Wi-Fi issues. Never, never once. I'm just messing with you guys. Hopefully getting that fixed for good now. But unfortunately, it means we're gonna have to push back that training till probably Wednesday at the earliest, is my guess. But we're still gonna have fun today. We're gonna do a little market overview session. We're gonna look at where the markets are pointing to for the rest of August. I'll give a few picks. Nate will give a few picks, and then we're gonna ask you guys to give some stocks you like, and we're gonna run them through Newton, the income machine, seasonality. So we'll do plenty of trading today, and you'll get our insights on stocks you may like. So that will be coming up here in just the next few minutes. Hopefully, Nate can get logged on so he can get his kick started with his two assets that he is seemingly confused on. And we'll see if we can get some more information out of him there and the direction we're headed with those. I always have to raise volume to hear him, and then let me see. Is my
You're fine. I can hear you fine.
Is this getting louder as I do this? Or
I'm
no, it's about
talking.
the same.
No, you're fine, man.
There's like a button back here for controlling the volume on
Yeah,
it, but
the gain or whatever.
I'm no microphone expert here.
Yeah. Nor am I. He's in like backstage or something, and I'm not sure even where he is. But let me get out of here and give me a second.
And then I'll take over. I'm not sure what's going on here. Sorry, I'm trying to make sure I'm trying to get my screen shared, but the PowerPoint I made for you guys today is just stuck refreshing on saving. So let me see. Huh. Thanks. Okay, my volume is good. Well, it says It's just that, Bodina, I don't know if you're the only one having that issue, but if you guys let me know if we have vastly different volumes here. I cannot get this PowerPoint slide to save, so this is weird.
You want to send me the link?
Yeah, I would, but every time I do it, like when I post a link in a new tab, it just starts on a blank, create new slideshow. Like,
Oh,
so
not saved at
that's
all.
really promising.
Yeah, we're doing well this
Let me
morning.
go ahead and see if I can share it, and just as long as it doesn't refresh.
Yeah.
Let's see. Let me give this a whirl. Share screen, entire screen. I'm gonna put you guys into the matrix real quick. Can you see my here? Oh, there we go. We're into the matrix.
There you go.
All right. Please don't refresh.
Yeah. We're good.
All right, cool. Well, I'll go ahead and get rolling here. Nate thinks he is logged in. He is not. Let me just say.
No, I got him already. He knows.
You are, in the wrong room. All right, he opened the door to the wrong room. But we'll go ahead and get rolling here. And then Nate will jump in and give us his big take on those two tickers that he's interested in. So for starters, you guys have seen this chart by now. I'm almost sure of it. We are now 11 days officially into August. So right about here on this line. And you can see this is the historical presidential cycle, first year term, first year of a new term, and then a new party in office. So this is for all first year cycles, and this is for a new party. Both downtrending from August through pretty much the end of September, not quite to the end, but through middle of September. And that downtrend really starts right about now. And this is just seasonally speaking, looking at historic data since 1949. So again, this does not happen every single time, but when you average it out, this is what it looks like. So if you've been coming to Opening Playbook, you know that I think we may have a rocky patch ahead, which isn't bad. There's still opportunities. It just calls for us to be a little more selective with our trades. Here's just another view at this. So you can see the August and September seasonality in the market. You can see every single month. This would be a good one to screenshot and keep. You can look at the dark blue, light blue, orange. Those are just typical seasonality periods. This gray bar that you see here is specifically the post-election years. So like this year, 2025, 2029, 2033, and so forth. So here you can see August is typically one of the worst months. February was another one. August is typically a pretty rocky month in the first year of office, in September as well. So just confirming what we just looked at. And seasonally speaking, the markets are normally pretty soft then too, September being the worst month historically for stocks. Now, here's where we're at in the S&P 500 right now. Just looking at the SPY ETF. Again, if you guys have been coming to Opening Playbook for the last few weeks, you know that towards the end of July, I said, hey, we're going to see some volatility increase here going into August. We're going to see markets move up, move down. I actually said last week, I said, I would not be shocked if in the month of August we see all-time highs in the stock market, and we also see a 5% drop in the stock market. Those are two very different, very vast moves, but that's just par for the course when it comes to trading in August and September, and particularly August, where we see those sharp moves. Now, if we look at the VIX index, which is the volatility index, very, very normal for this volatility increase in August and September. You can see August being the peak for the VIX each and every year. Again, this does not necessarily mean that the markets just are going to crash out of the sky. A lot of people think VIX goes up, that means we're falling to our deaths. No, that's not necessarily the case. It just means we're probably going to see more of this versus like July here, very steady, grindy month. August, just a little bit more movement in the day-to-day action. Now, of course, I say that, and naturally today the markets are pretty much parked out flat. But generally speaking, we should see more movement over this month and next month, which can be very good for like my 60-minute income trade. It actually performs better when volatility is increased. That's because the way it works, we want to see a directional move towards our target. So when we do get increased volatility, our directional moves just get bigger, which help us hit our target faster. So there are very, very good trading strategies for this month, for next month, but we want to make sure we steer you in the right direction here. Additionally, gold seasonally strong in August and September and July. And if you think about it, it makes sense. Volatility kind of measures uncertainty in the market. So when uncertainty is higher, people are going to move to alternative assets like gold, which is typically, more of a safe haven asset. Now, a lot of people didn't even catch this. I didn't even think Nate caught it. I had to convince him about this. Welcome, Nate, to the show. Gold futures hit all-time highs last Thursday night. Who here knew that gold futures hit all-time highs on Thursday night? Anyone? It wasn't in like hardly any of the news. I just happened to be looking at the gold futures and I said, wait a second. Pretty sure 3,500 was the all-time high price and we just topped that. So yes, Mike, you're exactly right. There's a rumor of the tariffs on bars, sent it flying sky high. Now we're back down to 3,400 since then, but it's interesting. You can see here the dark gray is the daily time frame. So like right now it's intraday. This light gray is overnight. So it's in the overnight market, Thursday night going into Friday. Gold sneakily hit all-time highs, since pulled back a little bit from there. But we should not be shocked by this because, again, seasonally, we should be expecting gold to appreciate right now. And on another asset, looking at August and September, Bitcoin, which again, this may be a little bit different this year. We'll see, because historically Bitcoin was more like small caps. So it was a very speculative risk on investment. So when fear increases, you see things like Bitcoin and small caps really get hit. That's very normal. So August and September, when fear increases, are actually historically the two of the worst months for Bitcoin. June also being a pretty slow one typically. But you can see here the median negative for both of them. The average for September negative. Average for August mostly flat. Now it will be interesting to see if Bitcoin acts more like gold this year. I know during the tariff chaos, Bitcoin actually held up relatively well, especially compared to a lot of the more risk-on tech stocks. So we'll see. We'll see if Bitcoin has its usual August and September pullback or slump, or if it's going to change its course and be that more safe haven asset that we sort of saw rumors of earlier this year. Now, we did see a big weekend pop. So here's Bitcoin over the weekend. This is a 30-minute chart over the last month. So you can see this happened at the beginning of July, big weekend pop, and faded all the gains from there. Here's us this weekend. Big weekend pop, pretty much the same size. So far, it's been fading. And right now we're parked out right here around $1,200 or $120,000, excuse me, on the Bitcoin futures. The gap lower would be about 117,500 level. So we'll see if we get that same song and dance here, or if it changes its tune and it wants to go higher, and it's typically more rocky month. For the economic reports this week, now, I think we're going to have a little bit more of a quiet day today. As a matter of fact, I'm looking at my 60-minute income indicator right now, and we've stayed range-bound all morning. I think we may see a very, very soft or just quiet day today. And the reason being, we have CPI tomorrow morning, which is one of our key inflation metrics, our key inflation reports. All eyes are coming back to interest rates. What will Jerome do? Will he cut them? Will he not? It's actually becoming important again and relevant. Especially with all of the headlines of Trump wanting to bring in a new chair who's going to cut him as fast as possible. Well, what's going to happen right now? Well, we'll find out a lot more on Tuesday morning. It's tomorrow morning before the market opens. So we'll cover it in the opening playbook at 10, obviously reviewing what the data said and how the markets are reacting. But this is a very, very important report. I would go as far to say that this is the most important economic report currently in this market environment. So that's tomorrow morning. Then Thursday, we have PPI as well, which is similarly in the same ballpark there, and retail sales on Friday to keep it fun. So today may be a quieter day. Tomorrow, I think we're going to see a lot more volatility and throughout the week. For earnings this week, and you guys know we've been doing the closing playbook as of last week. So each day, 10 a.m., we're right here in the opening playbook to bring you the goods to get you kickstarted for your day. And then at 3:30 p.m. Eastern, we're just going to do a quick wrapping it all up session, place some trades together, have some fun, review some content. And so that's each and every day, 10 a.m. and 3:30 p.m. for you guys. Now, this week for earnings. So today in the closing playbook, we're going to have names like Oklo. Everyone loves Oklo. I love Oklo. I sold it way too early, but I love it. AMC, another fun name. Plug, which has been a big mover on earnings. And also SE, which is not a ticker that I trade very often. It's one that can be seasonally very strong and very good. But if you pull up a chart of SE right now, it's been a very strong stock. It's a good one to definitely have on your radar. And they also have earnings tomorrow before the opening, so that could be a potential trading opportunity at the 3:30 session. Then Tuesday, CoreWeave, Rigetti Computing, big, fast-moving names right there. We've got Kava, which used to be a darling. We took profits on that. Food industry has been slumping off. I saw something, Nate, the other day. Actually, I think it was yesterday, about consumer spending really reining back in. It's below the midline of average on consumer spending. So that's really going to hurt, your favorite fast food stocks or, maybe the more bougie ones like Kava and Chipotle. But we'll see what they have to say. H&R Block has been a good one to trade on earnings. Wednesday this week, Cisco, JD, which is obviously a Chinese stock, big mover as well. But John Deere, I highlighted here. It sounds like the most boring stock in America. Cool looking tractors, but boring stock. We've seen some big earnings moves from John Deere, and we've seen some options ordered. Actually, I had a massive trade on John Deere probably about a year ago today on an earnings bet, so we'll keep an eye on that in the closing playbook. And then Thursday, going into Friday, AMAT, Nucor, and some other names as well. So not the biggest week of earnings ever, but it's not a blank calendar by any means. There's plenty of action this week. Between this, CPI, I think we're going to see plenty of volatility and market movement this week.
And Graham, I would imagine the expected move on Circle's got to be massive too. The volatility from that, crazy, just recently IPO'd stock that's been going nuts.
Where's that one at?
That looks like tomorrow.
Oh, right there. Tomorrow. Oh, there you go. So be at the open or at the closing playbook today.
So I might take a stab on that one. I was gonna today for closing playbook. I was gonna do a quick debrief teaching on our two-way trades, and maybe put on one or two-way trades for earnings tomorrow on Circle. If that move is big, might be an interesting one to give that a whirl on.
Yeah, definitely. All right, so we got a lot to look forward to this week. Let me get back through here. 4 sectors and stocks for August that I like right now. Well, first off, I just pulled this sector report from Bespoke this morning. They have an awesome, tremendous pool of resources. This is from August 11th through the end of the month. Just looking at 10 years of data here, you can see ETF-wise. We've been saying this too, so hopefully you've been paying attention. Technology is the strongest sector for August. Obviously, QQQ would be up there because it's a lot of technology. SMH, this in my opinion is the one to focus on. Inside technology, that's your chip stocks. Chip stocks are typically very hot every single August. And they are right now. I mean, think of AVGO and NVIDIA. They just keep going higher and higher and higher. Even AMD, who came down off the I thought they had good earnings. Wall Street sold it for some reason. It's already bouncing back. So SMH inside the technology sector is very strong right now. And some other seasonal picks that popped up on this Bespoke report from today through the remainder of the month of August. AVGO, that's Broadcom. Stock I just mentioned, chip stock, very strong. It's gone up 9 of the last 10 years from now through the end of the month with an average return of 3.5% on the stock. If you trade options, how I trade them, a wrap order, definitely a very good viable opportunity there. If you want to trade out of the money, like a jump trade or an elite option, definitely a good one there as well. Now, keep in mind, they do have earnings on September 4th. So this play is technically through the end of the month, but if you're selecting options, I would just pick the expiration date of August 29th instead of doing September 5th. That way you can avoid the earnings week. So August 29th would be the expiration to use here. Another very good, strong stock who just came off of earnings, and whoa, they're cooking today. Good to see that they're cooking today because I thought they popped on earnings and then faded. Let me just pull it up here, actually. Take-Two Interactive, very strong stock, seasonally strong. You can see it's gone up 9 of the last 10 years with an average return of 3.3%. Oh, I've got to close this to bring up my, here we go. Because I've been signed out. This is great. All right. Take-Two Interactive, you can see here the pop after earnings, big fade, And look, they've already filled that earnings gap today, this morning, up 3.5% on the stock there. So I really like Take Two right now. Beautiful trend, good positive movement today to fill that earnings fade. And again, if you would like to trade the options, and of course, I'm going to have to figure out what to do here with my screen share. Let me just put this one up here. If this trade is technically viable through the end of the month. And I'm going to try and bring back my slideshow that just signed me out. All right, it's back. Cool. So if you want to, we can look at trades on these stocks. And then the last one here that I saw that grabbed my eye, VST, which is a utility stock, but it's also been one that's been very, very strong. Seasonally, a good one to hold from now through the remainder of August. That's just seasonally speaking. And let's look at the stats. 88% positive, so that means it probably traded 8 of the last 9 years was positive, with an average return of 4.4%. These are not small returns. Think about that. That's not 4% in a year or 6 months or even 1 month. That's like 3 weeks. So VST is another good one. Let me make sure. Yeah, they just had earnings, so you should be all in the clear there. And I just realized I'm not in full slideshow mode. Let me go back. And again, we're going to come back and get some of your guys' picks here as well. We'll do some options trading. Let me give you some speculative plays, just something to nibble on if you're interested. I just put my retirement account. If you know, I've got a retirement account that I can no longer contribute to. So I'm just trying to speculatively grow it as fast as I can because I can't add to it. So I'm just kind of having fun with it. Currently put it into a stock like this, which if this doesn't work out, I guarantee you about a month or two from now, I'm going to come back and say, I tell you guys never trade a stock like this. So why did I buy it? But if it does work out, I'll look like a genius. Novo Nordisk has taken a big beating. This is the Ozempic company, if you're familiar with the popular weight loss drug. Eli Lilly had been gaining market share. Novo Nordisk really struggling. Well, now we're seeing a similar move that Novo Nordisk made in the past when their share price had fallen by 60, 70% like this has. Swapped out the CEO. They're showing promising drug pipeline. They showed promising results where their drug was actually more effective than Eli Lilly's. So this could just be one for a snap back play with 3 important profit target levels here, in my opinion. First one being 70. That's just the gap fill higher. After that, you can see this big gap fill down. I would look, it's at $50 right now. So a move to 70 would be a 40% move on the stock. So my first profit target, 70. Second one is at 87, which is going to get you right in this range from the previous gap down would be profit target number 2. And then profit target number 3 for me is back up here to $100. Now keep in mind, that may sound like a big move. That's 100% return on this stock, but it was just 1 year ago at 140. So to get back to all-time highs would be almost a 200% return. I'm not going for the whole thing. I'm going for a short-term bounce back on the max pain concept that they have already been taking a beating to the face over and over and over and over and over again. There's only so much downside left. In any sliver of good positive moves, I think we're going to see this one start to gain steam again in the near term. Not saying this is one I would buy and hold forever, but a near-term turnaround. And then my last one here for you guys before I turn it over to Nate. If we do get a market pullback, I told you guys in opening playbook, I don't know when it's going to happen, but I expect at some point the S&P to do a quick 5% pullback this month. I don't know when. I told you I also expect us to see all-time highs this month. But when we do get that pullback, I'm expecting a company like Rocket Mortgage to take the blunt of that blow, and I will be buying it then. This is a company that does mortgages, obviously by the name, Rocket Mortgage. My thinking is we are finally getting to a point where interest rates reasonably can start getting cut. We also know that in the spring, the Trump team is currently planning on appointing a chair who's going to cut. When interest rates get cut, 2 things happen in the housing market. One, everybody who picked up an expensive mortgage rate over the last couple of years, myself included, is going to be calling their mortgage broker and saying, I want to refinance for a lower rate. Well, a lot of those refinances go through Rocket Mortgage. Secondarily, I also believe that inflation will come back And I think we're going to see it in the housing market that when interest rates do get cut here again, we are going to see a little bit of FOMO in the market of people saying, oh my word, I missed out on what happened in 2020. Now things are so crazy expensive with the interest rates. They're going to see them get cut and they're going to say, I have to buy a house now or never. And we're going to see a lot more mortgage applications go through Rocket. So this is one that I would be looking out for about a year hold time to hit that top profit target. But if we do get a minor pullback here, a minor flush, I think it could be a good time to start dipping the toe in on ticker RKT. Again, here you can see my profit targets, $20 being the first one. I think that's a very reasonable one to hit. Right now, the company, I think it's at $16, $17. It was at 16 this morning. It's at 17 now. So that's what, $3 on a $17 stock, about 20% move there to get to that first profit target, and it's not very far away. Then 26 would get us back to those peaks that we saw at the end of 2020. And then this 34 one I put up there because I read a report where they basically looked at all the fundamentals for Rocket and then ran formulas on what happens if mortgage rates get cut, and because of Rocket's advancements in AI and the market share they are grabbing, where the stock could be valued at. So that's my lofty profit target there on Rocket if we get a pullback. That's a little bit longer prospectus here than the Nova Nordis play, but it's something to keep your eye on as well. All right. That's what I got for you. Nate, I'm going to turn it over to you for now to, I can't.
Can't hear you, Nate.
As much as I'd love to hear you, I can't.
Yeah, I can't hear you.
Oh, sorry.
Oh, Nate,
There
you
you
hit
go.
another weekend options?
Weekend options staying perfect. You love to see it. No, I think the FOMO in the mortgage world is going to be extremely real. It actually kind of reminds me of the buy the dip thing, where like in 2020, I feel like every retail investor said, I'm never not buying the dip again. And then as soon as the flush came this year, like retail was on it and buying the dip like crazy, even as institutional investors were missing out. And I think when you have those cycles, like we kind of talk about history rhyming, you see a lot of activity there.
Yeah.
By the way, guys, I mentioned in my Telegram, and then I was, trying to get myself sorted out here. So apologies. I mentioned there's two stocks. I'm just really waffling on right now. I'm normally pretty steady in the way that I think about the markets and the way that I think about stocks, but there's two that I'm just kind of waffling on, going back and forth. And I mentioned the first one who gets both right in the same message, if someone gets them, we'll do an opening playbook sweatshirt, one of these guys here for you. So I'll give you guys another, I don't know, let's say 90 seconds. The rules are very simple. You got to guess both tickers that I'm waffling between, whether they're good short plays or short-term or long-term, what they're correlated to, what they're not correlated to. There's two that I really have had different views on. So I'll give you maybe like 90 seconds to throw in an answer if you haven't got one yet. You're only allowed one, so you got to get one message with your guesses. You got to get both right in the same message, and we'll see if anyone gets them. Before I jump into that, so I'll give you a couple minutes to put those guesses in the chat. Well, I guess first of all, thanks, Graham, for covering opening playbook this morning, last minute when I was supposed to have a presentation ready and then was all out of sorts. So great job filling the gap and providing lots of value. Thanks for
I had to miss my morning workout, Nate. So you owe me. No,
I do owe you. I miss my morning workout every morning. It's a good deal to me. But yeah, thanks for covering that. So, the healthcare one is interesting too. We don't normally talk about long-term plays a whole lot here in opening playbook. It's fun sometimes to take a step back. I think the healthcare industry is interesting, and I'm curious what our members in the chat think as well, because we probably have a lot more people who do have retirement accounts and are thinking about their portfolio than me and you talk about, because we're almost talking about active trading every day. I was super bearish on healthcare since like October of last year. My thinking was, essentially Trump and RFK related, that I thought, healthcare was going to take a beating under those circumstances, even if a lot of policy didn't actually get executed, just the narrative around healthcare and those stocks would take a beating. And so I've been extremely bearish, but I do think we're kind of at that point now where you're beyond sentiment and narrative, and you're simply undervaluing really profitable companies that have, unbelievable numbers. And with the scale and the scope of our healthcare industry, even if we do get some policy execution, I have to imagine that the leaders in that industry are still going to be putting up massive numbers that, like you take like an NVO or something like that, they're not going to be putting up earnings 80% lower than they did 2 years ago. Like that's just not reality. And so it's an interesting situation because we're not seeing a rotation in the actual stocks. We're seeing some back and forth, like you mentioned, Eli Lilly, Ozempic, obviously, had its time in the sun, started fading. Like we have some of that back and forth, but we don't have companies that are, rotating out of being the top companies in the sector. We just have the sector itself that kind of got beat down, and an opportunity for the same companies that have been leading that sector for the last decade to, take back a whole bunch of market share. So I'll be curious to see how that plays out. If we're kind of in that max pain point, just literally buy the top 3 or 4 holdings, or just buy XLV directly and see if healthcare has a 30-40% recovery on the second half of the Trump term. And I wouldn't be surprised if it does. All right, let me flip over here and see our chat. Let's see if anyone. Oh, well, we've got some people who are close. Let's see. I see a lot of guesses that at least have one. I'll have to scroll through officially and confirm. Let me see. Oh, I see at least one that's close enough that I'll give them credit for it. Okay. So the 2 tickers that I have that I've traded actively, but that I really change my narrative on sometimes week to week. And I go back and forth between whether they're short-term play or a long-term play, and like what they're correlated to and how to evaluate them are number 1, Tesla, and number 2, Bitcoin. And I saw at least one person who said Tesla and IBIT. So that's good enough to count. We'll have to verify and make sure we get the first accurate one in there for our opening playbook. But the reason that I go back and forth, so I started buying Tesla way back during the April dip because I said, I'm not sure about Tesla fundamentally. I'm not sure about Tesla's valuation. But from a pure risk reward standpoint, I thought Tesla was the number 1 stock in the entire market. It had another 50% pullback. Every single time it had 50% pullbacks in the past. It had made all-time highs. It's had like 7 or 8 of them. So it's not like a stock that's not used to those massive volatile swings. And so purely from a risk reward standpoint, I thought Tesla made a lot of sense. I gave out that trade on one of the roundtables. I did another one in opening playbook. We did one in that dream portfolio. So lots of different ways over the last couple of months that I've kind of added different positions on Tesla. And I think those are at least worth holding because of the very core concept, that risk reward. But as far as an actual stock, I go back and forth between whether it's just a good stock to buy whenever it gets, 5% flushes because Elon and Trump are fighting and you trade the 1 week bounce back, for a triple digit return. Or if it's one where you hold if it does get to all time highs, then you actually start playing to the downside again and just wait for the next 50% flush. Or if it's one that has some stars actually aligning in totally the opposite way, where it is going to recover. Elon got that package. He is going to be super Tesla focused as a leader. He is going to be able to do, interconnected deals with SpaceX and other companies. And the robots are actually going to take off and, I would say quickly move Tesla to the most valuable company on the planet if they get immediate significant traction on that. And so then I start thinking, geez, maybe Tesla's the best buy in holding the entire stock market for the next decade. So I waffle back and forth on that one. And the point of that isn't just to tell you I'm waffling, although I am. The point is, I think that's another benefit to not just liking stocks or picking stocks, but to understand trade structure and to be able to say, listen, I'm really not sure about Tesla, but I could stack on 2 or 3 debit spreads with different expirations, open up, depending on your account side, $1,000 worth of risk, $10,000 worth of risk, $25,000 worth of risk, whatever your portfolio and situation is, but far less risk than owning 1,000 shares of Tesla because it can easily go down 80% at any given month. Significantly less risk than that, but still tapping in to a whole bunch of that potential upside. And again, use different time horizons, different levels, a 50% recovery, a 100% recovery, a 150% move way past all-time highs. with different trades. And so that's kind of how I'm taking Tesla right now. I have a couple of these different structured positions, and I'm just continuing to look at it as I really don't know, but I can't ignore the pure underlying potential. And then we've got Bitcoin. So I just wanted to give you guys an update because we've talked about Bitcoin a lot. I mean, we talked about it a ton for a season. Then it kind of was just middling around. We didn't talk about it a lot. Then we talked about it a lot again. Now it's kind of been stuck. We haven't talked about it much. I am waffling, Graham. I don't know if you're going through this at all, on whether Bitcoin is going to be more like gold or exactly the opposite asset of gold. Today, it couldn't be more opposite. The gold futures plunged 2.5%, Bitcoin's up 3.5%. And yet we've seen exactly the opposite in other situations. And so I'm still, I was someone who said it's not going to be a store of value back in 2020, 2021. And then I saw what happened during those really risk off, like kind of, ugly, concerning markets. And I was amazed at how well Bitcoin held up during those conditions. I thought, okay, maybe this transformation is really happening and it's really real. And Bitcoin's going to toe the line between an upside asset and one that stores value. And then since then, it's kind of been crazy risk on leading again. So I don't know what your thoughts are, Graham, but the way that I did this, I, for the first time ever, put exit orders on my underlying Bitcoin. So the Bitcoin that I'm holding in my Coinbase account, I put like an exit order on 125K and then one at, I think, 134K. And I basically said, if it gets to those levels, I'll sell out. I'm not going to hold it for the long term. If it flushes down to, $30,000 coin, then I'll buy more. But outside of that, I'm just going to trade the asset more directly through IBIT like I would. And the other one, use direction, not try to make any kind of fundamental long-term value plays on it, but just trade it like I would any other asset. So curious your thoughts.
I think this cycle compared to last cycle, obviously we talked about the adoption rate earlier and how it's just a much more common thing. And I think if you were to take a poll of 100 people, you might get 2 last cycle 4 years ago that said it's a store of value. Mm-hmm. Now I think you might get 30 people, maybe even 50. And now my point is, I don't think, Nate, that we're all the way there yet. We're from today going forward, everyone's going to be like, Bitcoin is a safe haven, store of value hedge like gold. I think we're going to see another crypto winter here very soon. I think we're going to see peaks this in Q4, a crypto winter, and I think we're going to see another year, 2 years of headlines of suckers bought Bitcoin. They're a bunch of dummies. They don't know what they're doing. We'll see a little flush out, and then it's all going to happen over again. And instead of 30 to 50 people saying it's a store of value, when it goes, this is my prediction, but when it goes from, back from 70K to 250K, 300,000, we're going to have 60, 70% of people saying it's a store of value. And I think we're going to see over the next decade or so, that cycle repeat until eventually it is known as its own store of value and not just a sheer speculative asset. But I don't think we're there yet.
Yeah, so you think that as we go through the cycles, that transition will take place piecemeal, kind of one cycle at a time, just as we've seen. Because if you go back to 2 cycles ago, then you're really like no one would even.
Oh, nobody. What are you talking about? I didn't even. I thought, I'm like, what is this thing? Yeah. But I think right now we're getting a lot of people jumping on the bandwagon. Harvard just bought Bitcoin. Yeah. For Pete's sake. I think as it keeps going up right now, there's going to be a bunch of people jumping on the bandwagon. And then once the crypto winter comes, a lot of those people are going to jump right off the bandwagon and try and point fingers at Bitcoin. But the thing is, there's going to be more people on the wagon at the end of the day than there were a year ago, than there were 2 years ago. And that's just going to keep on growing.
Yeah. No, I would tend to agree. The one thing I wonder is if it'll have more stability even through a winter. Because I agree. I think we're going to see, the cycle at least play out to some degree. But I wonder if we really narrow down those peaks and valleys because of, the Vanguards and the state treats, having them, even having them in retirement accounts and having, certain amounts of allocation for, trillions of dollars inside Bitcoin. And if that's going to, kind of narrow down those peaks and valleys over the cycles. And if that happens, it raises some questions like, does Bitcoin lose its luster if it doesn't have that 200% potential in a cycle if it becomes more stable? Or does it actually go the opposite? People say, okay, well, now that it is tighter and it is more robust, it becomes a better replacement for gold and actually gets more liquidity. So you could kind of paint it on both sides.
Mm-hmm. Yeah, we'll see. I do not think that the peaks are in for this cycle. I think we're going to see 150, at least 125. I mean, that's kind of a no-brainer prediction, but 150. And then I think this quarter into, some point in quarter four, we are going to see the peak for the time being. And then 2 years from then, we'll be jumping back on here now saying, okay, time to do it all over again. Time to buy.
Hey guys, I jumped on real quick because I just wanted to ask you a question. Chad posted about BTGD, and I was just curious if you felt like there was any advantage to buying an ETF that like invested equally in Bitcoin and gold at the same time. Is there any advantage to that over doing them individually?
That's pretty cool. I mean, for me personally, I have not looked at BTGD. That's kind of cool how they smooth it out. I would guess that your hidden fees are going to be more expensive with BTGD than just buying GLD and IBIT yourself and allocating the same. But that's a cool looking ETF. A lot of these ETFs, the fancy ones, the
Designer.
yeah, the designer ETFs, the what's hot in the news ETFs
Yeah.
have a lot of hidden fees. And a lot of times they'll underperform the actual assets versus like IBIT follows pretty darn close to Bitcoin, just like SPY is close to S&P.
Yeah, definitely the ones too that have like the synthetic call structures and different stuff like that. You're paying for a lot. I would, my gut would be no, but this is, I didn't even know that existed. So take my gut with a grain of salt here. My gut would be no, because I think right now you're still probably just trading off a lot of gains anyway. They're not harmonizing in a way that I think is consistent enough. So unless you're just saying, I want some upside of each and I'm totally okay to underperform, then sure. But I think right now, just with some basic analysis and cycles, you can probably do a lot better focusing on Bitcoin when it's doing well and gold when it's doing well than the smoothed out averages on each. But again, I'd have to actually look at the asset and kind of see, because maybe there is some correlation. Like today, good example, you'd be net up at 50-50, even though gold's taking a beating. So if that plays out over time, could be an interesting asset.
Cool.
Mm-hmm.
But Graham, you would basically just create your own. You're saying you'd 50% allocation at each and just create your own, track them together.
Right, just IBIT and GLD, whatever you wanted to put into it, just split it in half.
Cool. Yeah. Thanks, guys.
Yeah, good question though. Sense. We do have Helene joining us this morning. If you aren't familiar with Helene, that is Chuck Hughes' daughter. If you guys were with us last night, and we can get Helene on here. Now let me add you. Oh, there you go. Perfect. If you were with us last night, hey, Helene, I had Chuck on to walk us through a cool little overnight strategy based on a market anomaly that's been happening for years and years. And we talked about it last night when the futures market opened, how the markets were pretty flat. And today, I mean, the S&P is up 0.01%. So, I mean, it doesn't get much closer to nothing. And Helene, you've been taking this trade for about 90 days now, maybe a little bit more, three months and a couple of weeks. Had really great results from the live trading. That's why we were going to have her walk us through it today, show us what it's all about, how we can get started with this daily trade as well. But tell us, how did you do this weekend with your overnight trade?
Yeah, so on Friday, I placed a trade, and this morning I was busy running around. I have 2 kids at home, and I checked my phone, and it was closed out automatically, profitable.
Awesome.
So it was amazing. I love it.
That is awesome. So again, this is going to be something unique. Nate and I do not trade. We have not introduced this trading method to you guys before, the specific strategy we're going to cover right here, right now. But it is just another one to add to your arsenal. Your trading